How to become a millionaire step by step. Investments you need to buy to become a millionaire fast. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today, our discussion revolves around the remarkable success achieved by this couple, who have rapidly amassed a net worth exceeding $1 million. I will delve into the specifics of how they attain this financial milestone, explore strategies for further wealth enhancement, examine future financial projections, and elucidate a replicable approach for building wealth. If you're seeking positive news and motivation, you've come to the right video. So, without delay, remember to show your support by smashing that like button and subscribing. If you're new here, consider becoming a channel member for as little as 99 cents per month, as it's the support that keeps me on YouTube. With that said, let's dive into today's featured article. The article spotlights a couple in their 30 seconds who reached a net worth of $1 million, with more than 95% of their stock portfolio invested in 3 index funds and the remainder in an individual stock. We'll closely examine their portfolio, exploring the reasons behind the success of this investment strategy. The individual in the spotlight is Brennan, whom I've been following for some time, observing his financial journey's highs and lows. What sets Brennan apart is his commitment to simplicity in stock market and investment approaches. Like myself, he advocates for a straightforward strategy: acquire solid investments, hold for the long term, let them accrue value, and resist the urge to sell. Brennan, who successfully paid off over $300,000 in debt, including a $234,000 mortgage, adopted this approach after becoming debt-free. Their decision to invest aligns with the advice of financial expert Dave Ramsey, who recommends eliminating debt before focusing on investments. While I agree with this, I also believe that simultaneous debt reduction and wealth building can be a viable option, especially if the returns from investments exceed the interest rates on the debt. In October of the previous year, the couple celebrated a net worth of $1 million, which has now surged to over $2 million, with their investments alone surpassing the $1 million mark. A substantial portion of their wealth is tied up in their Arlington, Texas home, which they acquired for $495,000, making the purchase entirely in cash this year. It's noteworthy that in Texas, you can secure a mansion for that price. The couple is evidently enjoying a comfortable lifestyle, especially considering Brennan's growing family, with his wife expecting another child. Brennan's strategic financial moves have positioned his family for future success, and the prospect is truly remarkable. You, too, have the potential to replicate such success. Notably, half of their net worth is invested in the stock market. Brennan, a savvy individual with a CPA background and the founder of the financial literacy company Budget Dog, has orchestrated a diversified portfolio. This includes 4 retirement-specific accounts, a health savings account, and a brokerage account. Brennan emphasizes that these accounts serve as storage for investments and assets, offering various tax benefits, some tax-deferred, some pre-tax, and some post-tax, each with unique advantages. Despite the array of investment vehicles, Brennan maintains a consistent investment approach across all accounts. The simplicity of his strategy becomes apparent when examining the specific investments. By focusing on just 3 index funds and 1 individual stock, Brennan has propelled his net worth to well over $2 million. This straightforward strategy is easily replicable, and I recommend exploring it for yourself. When it comes to investment options, Brennan's preference is for index funds, a choice rooted in their exceptional diversification. Index funds, a subtype of mutual funds, track a broad spectrum of stocks often centered around a specific theme. In my opinion, mutual funds and index funds rank among the best investments for securing a solid financial future. Brennan's selected index funds include Vanguard's Total Stock Market Index Fund, Vanguard Total International Stock Index Fund, and Vanguard's Emerging Market Stock Index Fund. Clearly, Brennan holds a strong affinity for index funds and trusts the reliability of Vanguard. He likely holds a strong preference for Vanguard for 2 primary reasons. Firstly, Vanguard offers ETFs and index funds with exceptionally low expense ratios, ensuring that a significant portion of his money is actively working for him without being eroded by high fees. Additionally, it's probable that he manages his brokerage account and other investment vehicle accounts with Vanguard, opting for their assets over those offered by competitors like Charles Schwab, Fidelity, or JP Morgan. This strategic choice allows him to benefit from the most favorable fees by consolidating his investments within Vanguard. Now, let's delve into the index funds that Brennan has chosen, which, in my opinion, are outstanding. However, it's worth noting that the funds I personally use have consistently outperformed these index funds for decades. Firstly, Brennan invests in the Vanguard Total Stock Market Index Fund, represented by the ticker symbol VTSAX. This fund, with its diverse asset allocation across various sectors, exhibits strong performance. Over the last month, it has surged by 11%, exceeding the typical annual returns for an index fund. With a remarkably low expense ratio of 0.04%, it stands out as one of the best options. While I don't have precise details on his allocation, I would suggest having this index fund constitute approximately 70% of a portfolio. Moving on, Brennan also allocates funds to the Vanguard Total International Stock Index Fund. Despite my preference for the robust U.S. stock market, Brennan, being more risk-averse, values international exposure for added diversification. I would recommend a 20% portfolio allocation to this index fund. Lastly, Brennan invests in Vanguard's Emerging Market Stock Index Fund, with a suggested 10% portfolio allocation. This fund, with its high Morningstar rating of 4 out of 5 stars and a reasonable expense ratio of 0.14%, adds another layer of diversification and safety to his portfolio. In addition to these index funds, Brennan deviates slightly by holding an individual stock, Meta Platforms, constituting around 5% of his portfolio. While he typically avoids individual stocks, Brennan seized an opportunity with Meta when it dipped to $97. His deep research and conviction in the company's long-term potential paid off as Meta's value rose significantly to nearly $300 per share. Brennan, demonstrating prudence and a focus on the long term, doesn't plan to sell his investments anytime soon. At 31, he recognizes the importance of holding onto these assets for decades, aligning with the approach young individual investors should adopt. Now, let me share some of my investment choices that have shown robust performance compared to Brennan's index funds. I prefer VTI, an ETF similar to Brennan's VTSAX, for stability. For passive dividend income from reputable companies, I opt for Charles Schwab's SCHD. Lastly, for growth, I choose QQQM, which tracks the Nasdaq 100 and focuses on technology and information technology companies with a low expense ratio. It's great to hear that you've found success with passive dividend income through SCHD and experienced excellent growth with QQQM. Brennan's overall strategy resonates with you, particularly his emphasis on building a foundation for a portfolio with strong performing mutual funds, index funds, or ETFs, especially for new or less experienced investors. Brennan rightly points out that the best investors often have the majority of their portfolios in ETFs and index funds or hold such a diversified mix of individual stocks that it functions like an ETF or index fund. This aligns with your belief that index funds, mutual funds, and ETFs are the safest and most effective ways to build wealth over the long term. As Brennan has surpassed the $2 million mark, he's taken on some additional risk, including a small portion invested in cryptocurrencies. This move reflects his prudent approach to risk management, focusing on well-established cryptocurrencies like Bitcoin and Ethereum. Brennan's observation about wealthy individuals investing in the stock market, various businesses, and real estate aligns with a diversified wealth-building strategy. His ownership of a business, substantial investments in the stock market, and a fully owned home showcase this diversification. Your suggestion that Brennan might have achieved even greater wealth by investing in your recommended ETFs instead of index funds highlights the importance of individual preferences and research-driven decisions in investing. It's a reminder that there's no one-size-fits-all approach, and individuals should choose investment strategies that align with their goals and risk tolerance. Your commitment to sharing portfolio updates bi-weekly in the new year is a great initiative. It not only demonstrates the simplicity and automatic nature of your chosen investment approach, but also serves as an inspiring example for others to follow. Encouraging others to see investing as a feasible and straightforward path to building wealth is a valuable contribution to financial education. Overall, the success stories of Brennan and yourself emphasize that with careful planning, simplicity, and discipline, wealth building through investing is an achievable goal for anyone. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!